Soybean futures remain in a trading range. Will this continue?
Soybean futures remain at the midpoint of a pretty broad trading range. On the downside, we've seen a drop in demand for U.S. soybean exports. And we also have seen a little bit less China demand and a lower Brazil premiums. And there is concern that USDA numbers on Friday were a little negative, even though private analysts feel that the U.S. soybean supply situation is tight until harvest. So I think we stay in this trading range between $13.50 and $14.50. As the year progresses, if the situation in the U.S. as far as tight stocks continue, we will test, I think, the upside of that range.
Corn fundamentals appear positive. Will this push prices higher?
USDA dropped on Friday U.S. corn carryout, but not as much as people think. Private analysts feel that the carryout will even drop even more. This follows up with USDA's intended U.S. 2021 corn acres less than the market thought. And so it suggests the 21-22 carryout may also be tight. All this suggests that in the coming weeks, we could see corn prices push higher. The key will be what kind of weather pattern we see across the U.S. this summer.
What is the latest U.S. spring weather forecast and its impact on prices?
We're starting out the U.S. spring right now with cooler and drier than normal conditions. I think overall soils, especially in the east and south, are adequate, but these cool temperatures may slow corn planting because it could slow germination. May temperatures should bounce back, but we'll be watching pretty closely this year's rainfall as percent of normal, especially in the northern plains, western corn belt, and southern plains. We'll also be watching spring weather in western Europe, the Black Sea, and the Canadian prairies. So all in all, I think the spring forecast is okay and probably limits the upside in grains unless we start turning to a drier pattern this summer.
What was Federal Reserve Chairman Jerome Powell's message in a U.S. media interview released on Sunday?
Federal Reserve Chairman Jerome Powell said in a U.S. media interview that was released on Sunday that it is highly unlikely the Fed will raise interest rates this year, despite a stronger economy. He said the U.S. economy was at an inflection point and looked set for a strong rebound in coming months, but he also warned of risks. Also, he said the Fed will do everything that it can to support the economy for as long as it takes to complete the recovery. So I believe his message was successfully delivered, and it did instill confidence that there will be recovery in the U.S. economy.
First quarter earnings season kicks off this week. What can we expect?
First quarter earnings seasons begin this week, starting on Wednesday with the big banks reporting. The recent increase in interest rates is viewed as supportive to the banking sector. So the S&P 500 earnings, based on the estimates that we have seen, are likely to be up 25% in the quarter from the previous quarter. That would be a year ago quarter, and that would be the largest quarterly gain since 2018. So I'm inclined to believe that earnings overall will be as expected or possibly better than expected.
What is your stock index futures outlook?
So we'll see what the earnings look like this week, but overall, stock index futures continue to perform well for the news, and I'm not worried about the recent increases in interest rates. And in my opinion, stock index futures will continue to trend higher.